We're going to be covering another important live stream, really covering the digital evolution of the banking and lending system, particularly around stablecoins. We're going to be talking about what stablecoins are, how they are looking to impact the entire financial sector, but the banking and lending sector in particular for us. And we're going to be talking about who is predominantly targeting, pros and cons, potential pros and cons, and the importance of, once we get through this information, the importance of really locking in on developing your banking relationships, your lending relationships, to really prioritize personalized service. And you'll understand what that means when we get towards the end. But in a nutshell, what I'm basically saying is, once we get through this information, you're going to quickly understand that if you're not in a good position with your banks, your lenders, you're not in a priority-like position, that you will find yourself dealing with less and less human beings, a lot more technology, and may have a more difficult time getting the assistance, the guidance that you need to develop your finances as this tech continues to roll out. So hang on towards the end. We're going to use that towards our final chapter or two of the video. So most importantly, I want you to understand, getting into this live stream earlier, whether you're catching it live or you're going to end up catching the replay, I'm not going to bore you to death with every single logistic detail, code behind stable coins and how they work. I want to give a good framework on what they are, how they're supposed to function, and some of the potential pros and cons and impacts it's going to have. But we're going to do it as understandable and relatable as possible in this video. I am not a tech person to that extent, so this is going to be focused around the banking, lending, building wealth. What is it going to look like when I go to apply for loans and credit card changes and these kind of things? How is this going to affect, my ability to function with my money and to be, of course, if you're on this channel, looking to optimize, maximize our net worth, maximize our financial sovereignty, our financial freedom. So this is what we're going to be covering in this live stream. Some of it will be technical jargon, but I will do my best to break it down and make it make sense and give my perspective on it along the way. So for those of you who have the attention span to get real value and insight, hang tough in this one. So let's get to the nitty gritty of what stable coins are in the first place. Let's see what we got. So stable coins are a category of cryptocurrency designed to maintain a stable value, typically by being pegged to real world assets like the US dollar or gold. This design aims to mitigate the volatility common in other cryptocurrencies, such as Bitcoin, making them more suitable for everyday transaction and as a store of value. So immediately before we get any further, you can see out of the gate, there is a P&R, my guy, man. I love to see y'all coming in. My top pioneers, I see you in the building, my guy. I see you in the building showing your support. Much appreciated. Y'all like, share, comment, subscribe, leave your super thanks, to support the channel, because the channel is absolutely pouring into you. So you can see from the intro statement that I just read that there is basically this is a digital replacement, or at least a digital alternative to tangible currency and tangible commodities. So what does that mean in plain English? What this basically means is this is intended to provide a digital capability, platform, etc., to what would normally be transacted in US dollars or potential commodities, gold, silver, potentially oil, whatever. So this is going to open up the door for a lot more transactions that might normally be conducted in tangible forms, now being able to be done on a digital platform. Okay. So this immediately gives you an idea of the framework of where this is headed. All right. So how stable coins work. Stable coins primarily achieve their stability through various mechanisms, including asset backing, collateralization. So fiat backed. Fiat currencies are already not backed by anything, which is entertaining, but let's run with it. Fiat backed. So that means that basically currencies around the world, these coins can sit on top of, if you will. The most common type where stable coins are pegged to fiat currencies like the US dollar, euro, and others at a 1-to-1 ratio. For every stable coin in circulation, an equivalent amount of the backing currency or higher liquidity assets like short-term government securities is held in a reserve by a central entity. If a stable coin is pegged to the dollar, it means one coin is designed to remain worth $1. So for those of you who are kind of on top of things, the US dollar already is not backed by anything, and it's able to be printed pretty much on demand. So that's a pretty entertaining concept, because you're taking something that already isn't backed by anything other than the full faith of the US government, and you're dropping a digital platform or a digital, coin on top of it that's going to be backed by that dollar. That's not really technically backed by anything but the full faith of the US government. So interesting already. Commodity backed, stable coins backed by physical commodities such as gold or other precious metals. For example, PAX gold represents 1 troy ounce of gold stored in a secure vault. So this is another scenario where, if you can hypothetically envision, you might be able to, they'll probably roll out some kind of product or capability where you could potentially purchase gold or purchase silver, but in a stable coin, if you can envision that. So that's the kind of thing you're seeing. US dollar transact, we're going to get into the weeds on it, but you're already talking about stabilizing it to currencies, allowing for the ability to transact, the stability of the currency. So 1-to-1. You're doing the same thing with commodities, where it's like an ounce of gold can be, represented by an ounce of a stable coin, or however you want to go about that. A troy ounce of gold could be representative of a stable coin. So this is going to allow for a lot more digital transactions all over the world. So that's just setting the foundation out of the gate. Crypto backed. So this also can be backed by other cryptocurrencies. And this is interesting because they're saying often in an over collateralized manner to account for volatility of the backing crypto. So an example of a decentralized stable coin backed by crypto AI. So it must be one of these stable coins that already exist. But basically, this is a scenario where, they're going to potentially back it by other cryptocurrencies, which is entertaining. My guy PNR says sounds different, but will it work? So we're just going to be focusing on comments from my pioneers. If you're looking to get your comments, your questions read, please leave a super chat and I will go from there. But for my guy PNR, has been plugged in with me from the early days. Sounds different, but will it work? So we're going to get into that. We're going to get into that because there's a lot of potential risk and challenges, PNR and everybody else that's watching. A lot of potential risk and challenges in allowing. So it's going to come out. Let's get that part clear. From what I can see, there's already a lot of investment in this. This is like already baked in. But the question is what the adoption looks like, the rollout looks like, and the use cases, regulations. We're going to get to all of that as I go through this. And again, I'm going to do my best to keep from being overly technical. We have to give you the facts. Benefits of stable coins. So reduced volatility, offers a less volatile alternative to traditional cryptocurrencies, making them more suitable for daily transactions. Key point, making them more suitable for daily transactions. So basically a really, really polite way of saying we're looking to take existing digital transactions that are 100% based on a dollar. And we're also looking to take what would be normal tangible transactions, or maybe even complicated stuff like more complicated transactions like wire transfers. And we're laying this blockchain stablecoin technology on top of it. And this is going to allow for much greater use cases and likely cheaper in some ways. All right. So you're already looking to take what, again, would either be more common, slower electronic transactions and what would sometimes even be physical transactions still. And this would turn out to be replaced, or an alternative would be presented where you can do these things with stable coins. Faster and cheaper transactions. I just said that. So leverage the benefits of blockchain technology, allowing for quicker and cheaper cross-border payments compared to traditional banking systems. I didn't even read that yet, but I did that. Accessibility. Provide access to currency benefits, particularly for individuals in countries with high inflation, allowing them to store their value without rapid depreciation. Increase liquidity in the crypto market, allowing traders to exit volatile cryptocurrency positions in a stable asset without leaving the blockchain. Risk associated with stablecoins. Despite their design for stability, stablecoins carry various risks. For PNR, my God, this might also answer some of your questions. Depegging events. What that is the possibility of stablecoin losing its peg, which is, again, either pegged to commodities, dollars, other cryptos, whatever, right? To the underlying asset, potentially leading to a significant financial losses. Counterparty risk, the risk of associated with stablecoin issuers' ability to maintain sufficient reserves and honor redemptions. Centralization concerns. For centralized stablecoins, reliance on a central authority raises concerns of transparency, censorship, central single points of failure. Algorithmic risk. Algorithmic stablecoins, particularly those without reserves, can be susceptible to vulnerabilities in their algorithms and market manipulations, as demonstrated by collapse of Terra USD. So I guess that was a previous stablecoin that was algorithm backed that had some issues or collapsed. Regulatory risk and operational risk. All right, so we already kind of touched on the pros and cons: stability, efficiency in transactions, accessibility and inclusion, enhanced trading and liquidity, integration with existing financial systems, transparency and security. These are some of the potential pros. Cons that could be there: reliance on underlying assets. Their stability depends on the value of an asset they are backed by. We just talked about how supposed stable these currencies already are. You're talking about backing the digital currency with a completely unsupported paper currency. Okay. Regulatory uncertainties. Regulation for stablecoins are being developed, which could impact their use case. So how do you make this safe for everybody to use? How do you make sure it's transparent? How do you make sure you minimize fraud, et cetera, right? Counterparty risk. Users could lose their investment if the entity assets fails. So if you put a stable coin out and it's backed by, whatever underlying financial asset that particular central authority is providing or backing you with, and it doesn't work. So like think about mortgage-backed securities, the 2008 crisis situation. Let's just think about that environment with stable coins on top of it. This was something that tons of money was being put into, etc. It was exceptionally high risk at the time before it went bad. It was high profitability. And then it went to basically. So just imagine something like that where it's like, oh, we were putting out a stable coin behind these mortgage-backed securities, et cetera, and it goes bad. Liquidity issues, centralization concerns, potential for misuse, consumer confusion. Some users may be incorrectly believe stablecoins are as safe as insured bank deposits. Right out of the gate, they're letting you know. At the moment, this is going to be a banking function, a financial function, tool set, technology that may not necessarily be FDIC insured. This is going to be something that is going to function a lot closer to some type of investment or separate financial instrument. So the stability factor is already up in the air. You were asking, how is this going to work, or will it work? That tells you right there. So another really important question I want to cover, and again, we're going to get away from all of the technical talk and just talk about this one-to-one, all right? Who will stablecoins impact the most when it comes to banking? Like, who is it going to impact the most, right? Stablecoins with the promise of speed, lower cost, and enhanced accessibility in payments and remittance pose a significant disruptive force to the traditional banking system, which many of us are already struggling with. I want to put this out there before I read any further. This is the basis of this video, this live stream, and the format I'm covering it in depth, because many of us are already struggling with the banking system, especially in Black America, but really people across ethnic and racial lines have not really caught up to the natural functions of the bank. The banking system is not that fast in a lot of ways, especially depending on who you're banking with. And it's still ahead of the curve, or it's still complex for many of us to operate and to move efficiently with. So imagine the adoption of the digital, fast-paced, in and out technology that, stable coins potentially and blockchain potentially is going to bring, that we already aren't versed on. It's not like they're teaching us these things before they roll out in school and stuff like that, right? In our careers, they roll it out. They give us light introductions to it. They market the hell out of it to us. And then we end up fumbling through the use cases and having all kind of issues. So there's not a real push in making sure there's a healthy understanding. And all of that having been said, this is on top of many of us struggling with the existing banking system as is. The following entities within the banking sector are likely to be impacted the most. I have no faith off that information that it's going to work, PNR. You're not buying it, my guy. You don't think it's going to go too well? Commercial banks and credit unions, especially regional and smaller banks, that is huge in itself. This is going to be they're expecting this to be the most impacted sector for financial institutions. One of the reasons why is because these are the institutions still doing things the old way. A lot of regional and smaller bank institutions and credit unions are still doing very manual style transactions. They're barely adopting the current digital landscape. You still have a lot of these banks and credit unions have basic online banking. It's trash. And it's okay to some extent, because on the flip side of that, you're getting exceptional personal services, great rates, like diverse product lineups. So it trades itself off. And it's not to talk about it in a way like these small banks and small credit unions are just garbage. They're not. But when you talk about the digital part of it, the accessibility, the online functionality, there are many hundreds and hundreds, if not thousands, of these small and regional banks and credit unions are already behind the 8 ball already. They're already struggling. So if you have a mass adoption or a mass force adoption of blockchain on top of this, you can only imagine what this is going to look like, especially depending on the speed at which it rolls out. So decreased deposits and lending capacity. Stablecoin adoption can potentially lead to a reduction in traditional banking deposits, as customers might choose to hold funds in stablecoin wallets for transactions or as a hedge against inflation, particularly in emerging markets. This shift can directly curtail the lending capacity of banks, impacting credit availability and economic activity. I should shut it off right there. I literally could just stop the live stream. Basically, what I just read to you is they're saying that just the adoption of this blockchain / cryptocurrency technology laying on top of the financial system can immediately impact the very heartbeat and blood flow of the economic system in itself, which is going to be traditional brick and mortar banks and their lending capacity, because depending on regulatory circumstances, which have shifted a lot, banks still typically have to hold some kind of reserves in place. So when you have a scenario where you have a technology that like this that rolls out, appreciate y'all for liking this and liking and showing love and hearts coming in, putting the emojis up, etc. Continue to show y'all support. Appreciate y'all. You basically have a scenario where this technology comes out and you have a lot of people, well, a reasonable amount of people, it doesn't even have to be a lot, just a reasonable chunk of people adopting these different, platforms and stable coins, etc., new financial instruments, we'll call it, taking their money out of the standard cash in the bank and transferring it to these digital wallets. This is going to ruin liquidity potentially for these credit unions and banks, affecting their lending capacity. When lending capacity is impacted, that means that all of the businesses and individuals that borrow money have a smaller pool to borrow from. If they can't borrow, then the economic system struggles. That's what we're going through with higher interest rates right now. So hopefully you followed that sequence. This technology already places a threat on where people will keep their money, which inherently creates a liquidity issue for banks, which inherently creates a lending issue for banks, and lending issues create economic issues in the system. So this is already going bad. This is already going bad. Let's keep increased funding costs. With diminished low-cost retail deposits, banks might be forced to rely more on expensive wholesale funds, impacting their profitability and potentially raising borrowing costs for consumers and businesses. This is drama show 2.0. Because of the same reason of money being pulled out of the standard financial system into this new digital, system, we'll call it, that can create a scenario where banks are not able to get money from the place they normally get it, and they're forced to get it from the wholesale market where it can be more expensive, increasing borrowing costs for us as individuals and as business owners. This is going bad again. Competition for stablecoin issuers, pressure on payment and fee income, because this one is basic pressure on payment and fee income, because this stablecoin is going to offer faster and cheaper and more peer-to-peer democratized forms of payment and transfers of money. So that basically means that it creates an inherent competition for banks. They no longer have that monopoly on an only more efficient or faster way to transfer money, being able to charge fees because of that. Now you're going to have these different platforms popping up where people can move money around fast and cheap without having to go through their bank and pay fees to do so. And that can be globally, by the way, not just amongst us at the dinner table trying to split a tab. We're talking about being able to, you know, send your Instagram buddy in Bangladesh money overnight, you know what I'm saying, for next to nothing or for much lower cost than a wire transfer might be, which is the most common way to send money internationally right now. All right, central banks, monetary policy effectiveness, cryptocurrency substitution and dollarization, demand for traditional currencies, regulatory frameworks, payment networks. All right, cool. So they're already talking about Visa and MasterCard trying to adopt these things, adopt the blockchain and stablecoin technology into their platform so they don't get wiped out. Because again, you know, their business model is like Visa and MasterCard. This affects credit cards and lending as well. Because what ends up happening is Visa and MasterCard are the ones that their business model is based on being a centralized place for you to be able to have a physical item like a credit card or nowadays a digital wallet to go at wherever in the world and pay for things. So they already kind of were the first iteration of an alternative to just carrying cash. Stable coins and blockchain are going to be sitting on top of, you know, your ability to transact and move money around. So now Visa and MasterCard has to find a way to corner the market still to keep their stable and growing. Because in essence, if they didn't change anything, something like credit cards becomes almost useless or obsolete, because I can move money around and pay for things through my digital wallet, my stablecoin wallet, or whatever it's going to turn out to be. So you kind of eliminating the value of credit cards and the way that whole system works, where you get interchange fees and pay people rewards points, incentivizing them to spend money. So, you know, they scrambling, trying to figure out how to integrate and adopt. JP Morgan Chase is talking about rolling their own stable coin out so they can keep the market cornered with transactions on their end. So you have a scenario where this is a decentralized technology, all right? Cryptocurrencies, at least as it's presented to us, there's a lot of suspicion on where they originate from. We'll leave that whole rabbit hole where it is. But they were intended, blockchain and cryptocurrencies is a decentralization method. This was intended and it has been supported largely by the community of people who has an issue with government centralization and government overreach. And, you know, they're big believers in privacy and private rights and private contracts and private land ownership and etc. They want to be able to keep their, you know, things anonymous and work more directly and counterparty risk. This is where cryptocurrency and blockchain at its inception and its early adoption, this is the group of people in the mindset and the philosophies that backed cryptocurrencies and backed blockchain. It was for individuals that were sick of big old banks having all the control and the government being able to be all in your business and, you know, all of the regulatory red tape between transactions. That's where this got adopted at. So when you look at this trying to be manipulated into and evolved into a mainstream use case where you're going to want transparency, you're going to want regulations, you're going to want centralized control mechanisms. You're going to have a ideological clash with what blockchain and cryptocurrencies was really about. And at least in its early adoption and inception, this is what it was about. So you're going to have the original group of people who are like finding these technical ways to get around the banking system and the government to move money around and do things the way they want to do it and keep maintain privacy and anonymity, etc. And then you're going to have the banks and the central power, you know, brokers and institutions saying, no, the hell with that. Y'all going to continue to funnel all of this activity and transactions through us. And so there's like democratizing it. This is ultimately going to, you know, that's what we're going to hit next. Is going to make this more accessible to more people. So this is going to help underbanked people more. There'll be more technology and capability for them to transact money and interact and function financially that isn't available now. You think about check cashing and check cash advance places and all this other stuff, payday loans and all that. This kind of thing could eliminate or reduce the need for those current financial services and instruments. That having been said, again, blockchain, cryptocurrencies really got their big push and they got their big backing initially from very wealthy individuals that are like anti-government or minimal government believers that, you know, don't like big centralized bank institutions and all this other stuff. They were the ones who the same group of people that want to go back to the gold standard and, you know, that kind of thing. They're not into the fiat currencies. They're not into the centralization of power through government agencies and big, large private institutions. This is where, you know, shout out to y'all leaving y'all likes, y'all super chats, you know, y'all super thanks, y'all comments. I appreciate y'all. Y'all continue to support the channel. Y'all got any questions or feedback down there? If you've left some support, I got you. I'll read your questions, cover your questions or your feedback. All right. So hopefully this is making sense for you so far. Hopefully you're getting the value out of how this whole stablecoin blockchain thing is going to potentially roll. Okay. So just to kind of recap, this is going to be an overlay, essentially, and some really smart technical person might have better terminology and verbiage for this. I said in the beginning, I'm not claiming to be an expert around this technology, but I have a reasonably strong understanding of banking, lending, and the terminologies and, you know, economics. I have a good tongue for that, if you will. And so I'm able to understand what they're trying to do with this blockchain and crypto stuff as I explain it to you, okay? So they're basically looking to create a digital blockchain-like stablecoin overlay of the existing financial structure and system. All of the transactions, including the very currencies we function with, they're looking to digitize it. And they're looking to create these various, you know, stable coins and blockchain overlays and technologies and financial tools and instruments to lay over the top of the transactions we commonly use on a day-to-day basis, as well as the high-level stuff that we have no idea is going on. So cross-border payments, exchanges of big funds through big institutions, you know, even central banks and their distribution of funding to retail banks that we're dealing with, like all the way up the food chain. We're looking at a massive overhaul of how money is moved, how value is transferred, how currency is exchanged, how payments are made, commodities are traded, etc. A massive overhaul of how all of this works. And I want y'all to find this very interesting because this is happening as COVID ushered in a massive revolt against cash. Every single one of you that is any level of an adult can attest to how cash became taboo, right? Like everything went digital. All right, look like we cut out for a second. Hopefully we didn't miss too much. I apologize about that. Internet's giving me some issues here. But what I was saying is this is happening right after we got about a 5-year stretch of cash becoming taboo after COVID. Conveniently enough, ironically enough, COVID ushered in a cashless society. It was already being discussed. There was a lot of technology coming out, but COVID sped up what would have probably been years longer of a nearly cashless society, where a lot of transactions and interactions that can be conducted in cash were forcibly transferred over, or at least alternatives were pushed over top and prioritized over cash. And I literally, as a business banker, deal with cash heavy businesses like food trucks, you know, right down to exotic dancers. And everybody's getting their money electronically now. There's still a lot of cash being handled and involved, don't get me wrong, but a very significant amount of, like, even exotic dancers are like getting Zelled and Cash App for their services on the spot, right? Like dragging your drunk behind to the ATM and getting the money out for the lap dance or whatever else is about to go on. It's now all being done through Zelle and Cash App and Venmo. So we were ushered into a nearly cashless society. You see they're doing away with coins. So all this has happened through the COVID era, and now we're 5 years into that transition, which feels like overnight. 5 years sounds like a long time, but for those of you who have lived through COVID and lived through the transactional shift away from cash, it feels overnight. So imagine now you are conveniently rolling out a subsequent technology that's going to take us already from adopting to Zelles and Cash App and Venmo. That's still new to us. Now you're about to drop cryptocurrency and blockchain on top of our daily transactions. So for those of us, again, I said at the head of the live stream, this is not to get into the technical weeds. This is to get into how do I continue to master my banking relationship so I can continue to maximize my money and maximize access to OPM, other people's money. How do I continue to maximize my borrowing capacity and keep up with the changes that will come to the lending sector? If I'm looking to start, grow, fund a business, if I'm looking to successfully invest in real estate, if I'm looking to get into private lending, whatever the case may be, if you're on this channel, you're a consistent pioneer, a viewer, you already know what I'm about. Maximizing your relationship banking and you're maximizing your borrowing capacity. That is the foundation. That is the overarching foundation to true financial success and advancement in this system. And this is going to alter that significantly. Now, its adoption and its rollout, hard to say, but I'm sure we're going to start seeing the larger banks, and larger entities and institutions find ways to implement this right in front of our eyes. The resetting. That's right, PNR. That's exactly what's happening. For those of you who are like tinfoil conspiratorial individuals, which all of us have some layer of, this is it. If you were going 10 years back, 15 years back, all of the conspiracies around cashless societies and ushering us into digital currencies and this stuff that was out and looked a little crazy or like, where the hell is this coming from 10, 15, 20 years ago? Here it is, nice and packaged, all pretty and etc. And Jerome Powell has been the federal head of the Federal Reserve, for those of you who don't know, has been on record recently in interviews, and I'm talking about as of 2025, late 2024, 2025, basically stating that there's no intent to get rid of cash as they continue to digitize the financial system and roll out tools and technologies to digitize and create blockchain technology over the financial system. It's literally the craziest thing watching these people tell us one thing in front of us and change things right underneath us in front of us. So that's basically what's going on. And for those of you, hopefully, those of you catching the replay and those of you coming into the live stream new, this is basically what the stablecoin, digital coin, blockchain thing is all about. Taking all of as many of the financial transactions, investing, all of that stuff, because you got to also think this is going to branch out to lending. So that means you're going to see what's called smart contracts in lending. They were talking about it in here. I didn't go into the weeds, but peer-to-peer lending is going to start to pick up because platforms and stable coins and all of these platforms are going to allow individuals to connect more directly. So it's going to be, again, it's decentralized finance. It's decentralized technology. That was the point. So it's going to be interesting watching these people try to grab on and keep power in the financial system and the regulatory aspect of it. But when there's going to be platforms allowing us to do this with each other with money all day, and smaller entities being able to transact and move money back and forth all day long. You know what I'm saying? Like, it's going to be fascinating to see, because there's going to be more and more fintech platforms and institutes that's going to allow us to move money back and forth, lend to each other, equity invest for each other. So it's going to have its pros, but it's going to also be interesting trying to watch these financial institutions maintain power. Something else I can tell you that's going to come from this. Watch what I tell you. It's not talked about. And maybe I should look this up to give you more precise numbers. Many financial Hold on for a second. I want to go over something with y'all. I want to go over something real quick with y'all. So something else you can expect from this. This is exactly what I'm talking about. Something else you can guarantee and rely on for this is watch how this shrinks the amount of banks in our financial system. How do I know this is going to happen? And for those of you who are sticking this video out and watching this, I want you to say you heard it here first, or damn near heard it here first if you heard somebody else go over it. There's going to be a drastic drop-off in financial institutions in the coming years. It's already happening for a few reasons. In the 1990s, just 30 or so years ago, many of you may not know, there was over 12,000 financial, the FDIC insured commercial banks, not just hole-in-the-wall financial institutions. FDIC insured mainstream commercial banks. There were over 12,000. Over 12,000. Now as of 2025, there's 4,400. Approximately 4,400 at the end of 2024. That is literally what's my math telling me? A third, right? That's like a third of the financial institutions in 30 years. Full scale, FDIC insured, all of the regulations passed, liquidity, all of that, banking, lending. 2/3 of the banks that existed in the 90s are gone as of the 2025. Gone. Y'all saw me shoot one of my more popular live streams about 2 weeks ago that talked about, and I'm gonna have to go back and actually film another live stream. Now that I'm saying this, I'm gonna have to cover another one on this topic, because I talked about black banks and the way that it's really impacting our community as Black Americans, not having enough of them, and how they're starting to go extinct. There was 134 of those in the early 1900s. There's like around 20 or so now. So black banks are already a fraction of the existing financial institutions. The existing financial institutions are two-thirds gone since the 1990s. Most of us were alive during this whole transition. I was born in the late 80s. So in my lifetime, there's been a 2/3 reduction of the amount of financial institutions, even though the population in this country is still growing. How is that ironic? Centralization is happening in our financial sector. And I just read to you not long ago how this technology adoption and rollout is going to put pressure on and honestly completely exterminate a lot of banks and credit unions. They're not going to say it in here because it doesn't sound pretty, but it's going to wipe out a lot of banks and credit unions. So for those of us that are in, minority communities, et cetera, the Black community, et cetera, you on top of this change, this is a broad scale American thing I'm saying. But if you are already in a niche minority group and you're already feeling the effects of not having enough, you're already underbanked, you already have lack of access to financial resources and tools, the lending aspect of it, that's already a huge problem. I've just been covering this video after video, live stream after live stream. If you're coming from the marginalized, Black community or historically marginalized, whatever, we're already in the current environment without these changes, generally speaking, struggling with access to the financial system, lending system, access to capital, quality, low-cost financial tools and products. Now you're going to have a scenario where we might go down from 4,400 financial institutions down to 1,000 in the next 5 years or so. And I know that sounds like most countries only have a handful. Canada has like 8 banks. Europe's the same way. So don't get it twisted. Most parts of the world have a lot less banks. But also don't get it twisted. For the capitalist society that America touts itself to be, there has to be enough financial institutions or any industry. There has to be enough for competition. That's supposed to be the point. So big banks like the JP Morgans of the world, Goldman Sachs, Banks of America, these institutions are going to continue to be behemoths and juggernauts. And the financial institutions that scoop up all of the other financial institutions, they get wiped out and exterminated. 2008 crisis facilitated massive changes and losses of financial institutions. I'm sure COVID had a massive impact. We got to look at those numbers, but I'm sure that there's a significant amount of financial institutions that are struggling or out of the door. We saw massive bank collapse since the 2022 interest rate hikes. What was that? I can't even think of the names, like First Republic and Silvergate or Silver something Bank, the Silicon Valley Bank, 2 biggest bank collapses in modern history, by the way. That wasn't some hole in the wall institutions that nobody's heard of necessarily. These were significant sized bank collapses. It's happening. So if those large, relatively decent sized institutions collapse, how many have closed their doors we don't even hear about? How many of you are passing around in your community and seeing banks slowly closing down or closing branches down? So what this means is, and this is what gets to my last point. I told y'all at the beginning of the live stream that it's going to be imperative for you to up your financial means, to increase your relationship banking, like capacity. I know that that's somewhat new for some of you guys. Like nobody's talking about that in that way. Like I am. I already know that. That's part of the evolutionary or revolutionary part of my channel. And that's the understanding that whatever financial strategies and methods and tools and lending and funding strategies and methods and tools you try to run behind, the banking system is at the core of it, and it's designed that way. And I'm teaching you that because I don't want you to keep continuing to get distracted by these other content creators, artificial BS gurus that are trying to get you to think that there's some way around this, when many of them have had the privilege and the capacity of having regular access to the system and have been able to get so far into it and above it or beyond it and integrated into it that they can dance with these other alternative means. Most of us don't have that luxury. So I'm reaching my pioneers that are building first generational wealth, regardless of ethnicity, race, and color. If you're American, whatever, you're coming into America and integrating, whatever, this is for you. But it tends to lean towards minority groups and those of us that are creating first generational wealth and didn't come from it in the first place, regardless of ethnicity and racial background. Those of us that didn't come from good financial stock and those that really understood the system and were taught that this is who this is for. So all of that having been said, the relationship banking concept, I'm telling you, I look at banks as an asset class almost. Yeah, and I know that probably sounds ridiculous to some, especially if you understand general finance and economics. But the reason I say so is because it's your ability to be strategic with a financial institution and make more money out of that financial institution than it's costing you. You're investing or pouring your financial resources into that bank. And if you navigate that relationship effectively, you will get more bonus offers, interest payments, reduction in, expounded on borrowing capacity at the best rates and terms, which you can turn around and take into the investment markets and the financial market and make more money on. So I look at banking relationships as an asset class. You are hearing it on my channel. I will continue to promote it until my lungs are out of breath, because you navigating the banking system effectively and building strong relationships literally is what's going to kick the door down to all other financial success. I don't care what other financial methods. I've heard almost all of them, the legitimate ones. I understand them enough to be able to tell you. I'm telling you, I heard the life insurance bank on yourself, velocity banking, the backdoor funding strategies and hacks that get promoted, all of that stuff, they're trying to run with you. I promise you, you're not going to get around having a solid banking relationship and a good foundation with banks and financial institutions and quality lenders to really exercise these things. So my point, you need to up level your finances and your financial literacy to master the banking relationship and the banking system. When you do that, you're going to inherently earn more personalized, human, specialized expertise service. Why is this going to be the cornerstone as this new technology rolls out, as cash becomes obsolete, as all of these changes get ushered in? Why is this going to be so important? Because you will need the highest level or the highest quality access to the relationship managers, the bankers, etc., to continue to prioritize your finances and your needs and to help you facilitate the benefits of these changes. Digital currencies, blockchain technology. If you are the average everyday person, I'm going to give you an example as I start to wrap this up. If you are the average everyday person, you already are experiencing a lot of self-serve options and a lot of lack of access to human banking, meaning human expertise. You are either getting a lot of AI and digital self-service that you're forced to deal with beyond what you want to, if you are getting a human, you're getting somebody on the other end of the planet that you can't even understand them when they're talking. So what you're getting and what you're experiencing now, before all of this is even rolling out, is a limited capacity to real experts and specialists that can help continue to optimize your finances, your investments, that you can actually relate to and understand, that are right there with you. They're going to continue to roll out virtual bankers, people from further away, people that don't speak your language. And on top of that, many of you, if you're not far enough in the food chain, you're going to get straight out technology. You're not even going to get to a person. I've said years ago that one of the changes in our society that are going to take place in the banking and financial system is going to be the cornerstone to it, is having human interaction when it comes to commerce, business, finance, lending, investing, is going to become a luxury. It's going to become a luxury. You being able to have a human that you can reach is going to start to get more and more reserved for the elite and the well-off. Those of us that are the poor, and even some of the middle class working people, you're going to experience more and more that technology, AI, and self-serve will fill in the ranks where humans used to be. It's already happening. There's more ATMs where tellers used to be. There's more and more technology when you go in the bank to negotiate transaction, cash a check, deposit a check. Oh, why is my check on hold? Why did the check get rejected? Why did this happen? It was the system. It was the system. The system did it. The system is telling me I can't do it. More and more technology is replacing human authority and human connection to be able to navigate these interactions and these transactions. So I'm telling you right now, if you can imagine this happening for basic stuff like cashing checks, depositing money, transferring money and they getting locked up, Zelling too many times and they getting locked up and having a hard time getting back access. It locks your whole online account because you Zelled too much or you Zelled inappropriately or transferred inappropriately. Locks your whole account up. Your account gets frozen and restricted. All of your money's tied up and you catch hell getting a human. When you get a human, you can't understand a damn thing they're saying because they're from Bangladesh, India, Thailand. No disrespect to those people, but that's irrelevant. I don't know what you're saying and my money's locked up. So I'm telling you in advance, for those of you who had the attention span to stay on a live stream, and for those of you who had the attention span to stay on the replay, the biggest thing that you can take away from this, of many valuable things, is that getting to a point and continuing to keep up with the access point to real financial and banking specialists, bankers, relationship managers, whoever. Keeping yourself and your banking relationship and your finances at a level where you're relevant enough to get that priority service is going to be key. Because as these changes come in the financial system, it's going to wipe a lot of people out financially. Many of us are still behind the 8 ball on very, very old forms of banking and technology and transactions. Many of us are already struggling with those things, and they're about to become obsolete in the near future. Completely obsolete. You think you don't understand how this stuff functions now. Imagine when this stuff gets even more technologically complex and there's less human access to walk you through it or hold your hand through it. Watch what I'm telling you. It's already happening. So hopefully y'all got tremendous value out of this. You should have. I already know I did a great job of covering the important parts of this and making it understandable and how it's going to relate to you and your banking relationship, your finances, and your lending relationships and exposure as time goes on. But if you're on a live stream by chance, you have any questions, you can demonstrate that you show other support other than watching the video all this time, which is an exchange of value. Let me know before I close this off if you have any questions. If you're catching the replay, drop your questions down below. I am very responsive to the comment section. I will cover your response with I will respond to your comment. Depending on, I'll respond directly. And if you got something even better going on, I might even cover a video response depending on what's going on. Other than that, but as I wait for any questions to come in, any comments come in, I want you guys to like, I want you to comment, I want you to share. Definitely send this out to more people who are having this conversation or need to be. Share this with them. Comment, like, subscribe. Of course, I'm going to continue to keep rolling out this content. Going on 700 videos in 2.5 years. Not too many YouTube channels doing that kind of work. So you already know there's no slowdown in this. I'm going to continue to keep providing value for y'all. So let me see my guy PNR Collector as usual. Thanks for the great insight. Salute my guy PNR, man. You are a gem. I appreciate you and some of my other pioneers that have been rocking with me for months and months now, and occasions even years plus. I appreciate y'all. Let me know if I can help y'all directly in any way. If I can work with y'all directly, the ones that I know I can recognize that have truly been supporting this channel. Your engagement has been invaluable. I appreciate you. If I can work with you one-on-one in some capacity, you know, and really add some value, answer some important questions, give you some important insights. You know, I master banking relationships, the lending sector, looking to get insight on buying a home and the lending capacity of that, invest in real estate, the lending capacity of that, credit card mastery, life insurance, you know, retirement accounts, etc. I have a broad range of understanding, knowledge, skill set. If I can help y'all in any way, PNR Connected, that's for you and any of my real tough pioneers, my true visionaries that's been sticking it out. I appreciate y'all. Let me know in the comment section if I can work with y'all in any way to really assist y'all directly. Other than that, to any new viewers coming in, thank you for tuning in and getting this value and getting this information and watching this, liking, comment, sharing, subscribing, and supporting. Get in the description section if you want to tie in with me on Instagram, if you want to work with me more on a one-to-one basis and actually get me in your corner on a first-hand basis, assisting you with maximizing your finances, optimizing and maximizing your banking relationships, maximizing your borrowing capacity so you can go out and invest in all these tremendous assets and opportunities out here, or fund your business that you've been dying to launch or you've been waiting to get the funding for. I can help and assist with these things. If you want to work with me one-on-one, comment down below and reach out to me, or get in the description section. Once I get everything situated, eventually there will be links and stuff dropped in the description of this live stream. I don't see any additional questions other than my pioneers that are down there. Nothing new. So I'm gonna wrap this up. As always, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.